Bracing for the bears. Continued downward trends in markets and strong dollar making things feel a little fragile, according to our next guest, and why a relief rally might not yet be cause for cheer. Joining us now, Veronica Willis, investment strategy analyst at the Wells Fargo Investment Institute. Good morning, Veronica. Good to see you. I think fragile is definitely a good description of, I think, how it feels out there right now. I mean, we have been talking a lot about earnings and how, on balance, they seem to be better than estimated. At the same time, the macro backdrop is tricky. Where are you seeing the sort of fault lines, if you will, that are causing this fragility?
Yeah, I think right now it's that balance between some of the more backward-looking information, like the Q3 earnings that are coming out now, and the expectations for the economy and what the Fed is going to do going forward. And it seems like in this environment, the market does want to cling to the information that still looks good. We're expecting that the economy did better in Q3 than it did earlier this year. As you mentioned, earnings on balance have been a little bit better than expectations for Q3. And so the market's taking that as a positive, while also kind of clinging to any hope that maybe the Fed might pivot, even though we're still seeing persistently high levels of inflation and rhetoric from the Fed that's indicating they're dedicated to remaining aggressive in order to get this inflation under control.
Veronica, so the fourth quarter right now is well underway, but we're still hearing a lot of companies come out and report some good earnings and highlight some strong trends so far in October. But is that it? Are we sitting here potentially in November and December talking about slowdowns or more significant slowdowns at these companies?
There's still a potential, especially on the retail side, for things to still be good through the holiday season. But then past that, the signals that demand may weaken as the economy starts to weaken gets a little bit stronger. And so I think that's something definitely to watch out for. The state of the consumer is really important, especially for our economy here in the U.S. And so while the consumer is still healthy now, still signs that the consumer should be healthy probably through the end of the year. That's definitely something to watch out for looking towards 2023.